Greetings and welcome back to the podcast. This episode, we are joined by Mr. Maynard Holt, founder and CEO of Veriten, an energy research strategy and investing firm. Veriten is well known for its energy-related podcasts titled Close of Business Tuesday and energy policy macro analysis titled SuperSpiked, both of which are produced weekly. Mr. Holt previously served as CEO of Tudor, Pickering, and Holt from 2016 until 2021 and has over 27 years of experience in energy investment banking. Prior to joining TPH, Mr. Holt worked at Goldman Sachs from 1994 until 2007 in leveraged structured finance and was a managing director in energy and power and natural resources. Mr. Holt earned a Bachelor of Arts in Economics and Russian from Rice University and a Master's in Public Policy from the John F. Kennedy School of Government at Harvard University. Among other things, we discussed 27 years of energy investment banking, oil demand outlook, and why it's an exciting time in energy. Enjoy. This podcast episode is sponsored by Veritas. Veritas is the world's largest energy-dedicated software-as-a-service company committed to helping customers close the gap between data and value creation. Veritas has been supporting the Canadian energy industry for over 30 years. Visit Veritas.com for more details. This podcast is sponsored by 5 Quarters Investor Relations. 5 Quarters elevates financial communications and market engagement strategies with tailored solutions designed to drive substantial value. With cross-sector experience and a focus on trust, quality, and integrity, 5Q can enhance your company's investor and stakeholder communication success. Visit 5QIR.com to learn more about 5Q's unique approach to delivering strategic IR and communications support. Good morning, Mr. Maynard Holt. Thank you very much for doing this. I really appreciate your time.
Trevor, you're kind to invite me. I'm happy to visit with you.
For the listener, you are the CEO of Veriten, but what is Veriten?
We're an energy research, strategy, and investing firm. We're about 2.5 years old. We've got people who love energy, find it fascinating, trying to figure out where all this is going. We're commercial people, so former research analysts, former bankers, former corporate people, some technology people, but all of us just working together, researching things in energy, advising our friends in energy, but also investing in energy ourselves so that we have to put our money where our mouth is.
If I'm correct, the Veriten Fund is at approximately $85 million as of today.
Yeah, we started, what we wanted to do is start a fund that was focused on investing outside of oil and gas. We think oil and gas is great, but we also think the world knows how to invest in oil and gas. What we're all trying to figure out is non-oil and gas energy and what makes sense out there commercially. And so that's where our fund is focused. Those are also the issues that we're really focused on understanding. I'd like to say we're a company with a mission, and the mission is to figure out where's energy going over the next 10 years. So we're doing everything we can to figure out the answers there. We do a podcast ourselves, talking to people about that issue. Where is energy going over the next 10 years? We try to get as many perspectives as we can. We do a lot of work with energy companies of all kinds, thinking about that question, thinking about their own particular issues and opportunities around that question. That's the advice part. And then we also do our own investing. And so really between those 3 different activities, we're solving for an outlook that we can share with our friends and use ourselves.
I also read you're a big Jeep collector.
Oh, that's funny. It's one of those things, Trevor, we're putting together the homepage for the new company, and it's like, well, we got to say something kind of interesting, give a little flavor. It is true. As a bit of a hobby, I started buying old Jeeps many years ago, and I had collected enough of them that they were starting to really annoy my wife around the house. You'd be amazed at how many Jeeps you can tuck into your backyard if you're creative with your parking. So I did get a warehouse where we store them, and then you can get some more Jeeps, and then you can work on them, and then you can work on your friends' Jeeps. And so when I was a kid, we had a Jeep. Well, that was sort of like my childhood hero. So I do have a lot of fun with old Jeeps.
insurance costs would probably be a bit of a expense item.
Well, we just try not to add up these things, Trevor. It's under the hobby category, so I don't force myself to examine it too closely.
Before Veritin, you had a career in banking. Maybe just to go back in time a little bit, how did you get into banking and why?
That's a great question. I went to Rice as an undergraduate. I was not an engineer, but all my friends were engineers, and they oftentimes went to energy companies. And of course, Houston was a very energy-rich environment. Oddly enough, I was a Russian major and an econ major at Rice. The oddly enough part applies to the Russian part. Econ was, that wasn't anything too exotic. But when I got out, I did do a stint as an analyst at an investment bank. And I found energy to be pretty interesting. I went off to grad school thinking that I might do something a little more international, a little more like in the diplomatic corps. I honestly, at one point, thought I might go in the foreign service. So I liked, energy is such a unique combination of interesting people, optimistic people, geopolitics, technology, things at big scale. It's a really fun business. And at my summer at grad school, I went to Goldman Sachs as a summer associate. So one thing I had kind of learned in my first couple of years out of college is that I learned that Goldman was a really good firm. This was 93. I learned that Goldman was a really good firm, and Goldman also was doing things in Russia. And so I thought, well, maybe I could use my Russian there. I got to Goldman. It was private, Goldman Sachs then. I was just so impressed by the firm. I remember I was there as a summer associate, and one of the assistants, I came in one morning and she said, "Did you see we were in the paper this morning?" And there was a story about Goldman Sachs, something about its profitability or something. I can't remember, but it was something in like the New York Post or something. And what I was really struck by is that she said we. So she saw that headline, Goldman Sachs, such and such, and she looked at it. And I don't know, there probably would have been, thousands of people working at Goldman Sachs, and it's a big place. But she looked at that article and said we. And I came away from that summer going, I'm not sure what I want to do with the rest of my life, but I really met some impressive people this summer, and I saw an impressive culture, and there's lots of things I could do under the hood there. There's all kinds of things. Maybe there's the Russia thing. Maybe there's the energy thing. Who knows what I want to do? And they also had a project finance group, which I thought was a little bit like private sector World Bank type activity. So I thought, well, that's really interesting. So long story short, I decided to do it. And I knew that once I did it, I should be careful because I might do it for a long time. And sure enough, that was the case. I ended up doing it for 13 years with them. 9 was in New York, 4 was in Houston. And maybe I'll answer something that you didn't quite ask me yet. But when I got to Houston, and this would have been from 2003 to 7, that's when I really realized how much about the energy business I didn't understand or I didn't appreciate, or how much more to it there was. And it was that chapter is when I said, it'd be really fun to start, to do it on our own. And that's when we started TPH. And that was 14 years. So between Goldman at 13 and TPH at 14, it was 27 years of energy investment banking.
Do you remember your first day at Goldman Sachs?
I do. There were about 100 or so associates starting on the same day globally at Goldman. And it's funny you asked that, Trevor, because for a long time, I remembered that date. I'm pretty sure it was like August 8th, 1994. And every year I was there, I would, have a moment of silence on August 8th. So it was kind of interesting. Everybody came to New York, and then they would go to the whatever office that they were assigned, but they, would have a month or 6 weeks of training. My favorite memory from that whole thing, I've never forgotten this, is there was a partner somewhere in the system. I think he might have been in the Dallas office or something like that. He knew the legendary coach of Nebraska, Tom Osborne. And this is 1994. And I know a lot of your listeners are Canadian, so maybe American football is not like the biggest thing in their life. But Tom Osborne at this time was like, a bit of a sports god. And this guy had asked Tom Osborne to speak to the incoming class of associates at Goldman. And he took the mic, and it was really funny. He said, I have no idea what it is you people do. However, I'm pretty sure that it doesn't matter that I don't know what you people do, because there are really 4 or 5 things that are critical to success, regardless of whatever it is you're doing. And then he rattled those off. I wish I could rattle them back off for you now. But the funny thing is, if I just never forgot in the intro where he said, I have no idea what it is you people do. So anyway, fun memories of all that.
I read that you worked on a lot of interesting deals, some of which were the leveraged buyouts and those kind of structured deals. Do you remember the aftermath of the 1980s LBO phase at Goldman when you got there? Was that still there, or was it kind of passed by the time you started?
Yeah. So, I was there, as I said, starting in 94. That era was not like the 80s era that you're referencing. But, people, of course, I guess this comes up a lot in today's world. We've been living in a very long stretch here of cheap debt.
Yeah.
That now maybe is going away. But you would definitely have said this was an era of cheaper money and plentiful money. And I did spend some time in our leveraged finance effort, and that was really interesting, bridge loans and all that sort of thing. Once you couple that with my energy experience, I would say at a young age, I got a healthy appreciation of the hazards of debt, because there's always somebody somewhere who's doing the cost of capital analysis and the spreadsheet math on how you should finance the company and what's the efficient way to do that, and what's the textbook and most thoughtful way to do that. But I learned, I think, in the 90s, between the leveraged finance experience and the energy experience, being debt averse is a good thing. That's the one way you can really get yourself in trouble. One of the first companies I worked with in the energy space was Newfield. And Newfield had been started by Joe Foster, who was just a legendary guy, just an incredible person. And Joe, before he was the founder and CEO of Newfield, had been the CEO of Tenneco Oil and Gas's division. So Tenneco had been a big industrial company. They got too much debt. They had to sell the oil and gas division. And, as a result, Joe and his team were out of business. And that's what ultimately led him to start Newfield. But he was sort of my first oil and gas mentor. And it was a hardcore principle of the company that they were never going to have too much debt. Mm-hmm. And it wasn't going to be based on a corporate finance formula. It was just going to be based on, we're just not going to use too much of that. I think he used to say, we'll never have more than 40% debt to cap. But so one of my first introductions to oil and gas was through Joe, and Joe was anti-debt. And so I probably have never forgotten those lessons.
Did you ever cross paths with the only banker Warren Buffett works with, Mr. Byron Trott?
I did. So Byron was many years ahead of me at Goldman, but I, knew of him and knew him a little there. When we got to TPH, Byron had started his new firm, BDT. And so Byron actually, there's a really interesting, the firm was set up to really focus on private companies and family-owned companies and advise them on their growth and exits or however they were planning and thinking. And so we ended up taking an investment from Byron when I was at TPH. And then we were part of his community of companies, and they had the Weber Grill people in there, and they had all kinds of different private family-owned companies. I think they ended up making an investment in Whataburger in Texas. It's one of my favorite places to go, Trevor. If you haven't been to Whataburger, we got to get you to Whataburger. It's not good for your waistline or your health, but you will enjoy it. Mm-hmm. But anyway, yeah. So had a good experience with Byron.
Did you get a sense that he was doing something different than the average banker, and that maybe there was a reason why Mr. Buffett trusted him and worked with him?
Oh, I think for sure. Without knowing all the details, I think one thing that jumped out is I think as I recall, it was just a level of focused and informed attention that really distinguished him in the eyes of somebody who is probably pretty discriminating when it comes to what banker he's going to talk to. But I think it was banking is an interesting business. It doesn't. I think sometimes it can get a bad rap because banking is very transactional and there's sort of the Wall Street imagery of it, and it's like some of you mentioned the LBOs, like some of the transactions end up not being great for the employees of the company. Like there's a lot of issues. Like banking gets a lot of warts associated with it. But what I used to love to tell the TPH guys is, if someone reaches out to you and says, "Look, I'm thinking about some really significant things from my company, and I would like your advice, and I trust you to tell me what you think is in my best interest. I believe you would maybe tell me some things that I don't want to hear, but you'll do so because you care about me and care about my company. And I value your experience and knowledge enough to not distrust you, but I think you may have some good things to say." If someone calls you and says that to you, I mean, it might be a banking context, but it could be any other context in life. I mean, that's a real honor. And so I think that's the commercial for banking, that if it's done right, you get phone calls like that, or you have moments like that in your life. To your point about Byron and Warren Buffett, he had clearly struck that kind of chord with Buffett.
After Goldman, you co-founded Tudor, Pickering, and Holt. Why did you start Tudor, Pickering, and Holt?
So I was mentioning, kind of alluding to before, I worked for 9 years at Goldman in New York. And, it was a phenomenal experience. You see so much there. You learn so much there. There's all features of the firm are there. And when I got down to Houston, I think that's when I really started discovering how the energy business could be done differently, because I started sort of seeing a number of different angles. One of the angles, in no particular order here, but I hadn't been in Houston long, and we had a project advising on the sale of Prima Energy, and we were partnered with Watrous. So, the great Canadian firm. What I saw in Watrous was, they had a lot of great, knowledgeable, technical people. They were engaged in not just company sales. Goldman was very focused on M&A, but they were doing asset sales. They had built a system that would help you sell assets, like the beginnings of the virtual data room, these types of things. So they had an infrastructure, they had an approach, they had knowledge, they had technical capabilities. And I saw them, how they understood things at a very detailed level that, your average banker did not. And I just also saw that they really took a real burden off of the company when it came to meeting potential buyers, answering their questions, facilitating the discussion, getting into the nitty gritty. In particular, I met a guy named Ward Paulzine, who was my counterpart on it. So I was just really impressed by that. And this happened again. It happened to happen when I first got down to Houston, but it was kind of part of the beginnings of thinking, boy, we could do this differently. We could do energy banking different than the way we do it. So that was an experience. The other experience that was interesting is in Houston, I forget how big our banking team would have been, maybe 20 or so, but there was also a large private wealth group in Houston. And if somebody's managing private wealth in Houston, the probability that the customer probably made their money in energy is high. So through the private wealth group, I started meeting many, many more private companies. And, private companies, and they were getting quite big. And so they were very interesting. And, this is now going back 20 years, Trevor, so a lot's changed. But in general, the companies that hit the radar of big investment banks are the public companies. So this was sort of a whole new bunch of companies that I found really interesting. They were really interesting people doing interesting things. And so I found that to be really, I found myself wanting to spend more time with them. The other thing I remember thinking getting down to Houston in those years is that I used to think what was phenomenal about Goldman is it really had a global network, right? The firm was a global firm truly. And for some reason I used to say, what I love about the place is you can get Putin on the phone. I don't know why I would always use that example. And I don't think anybody really wants to get Putin on the phone anymore. But in all seriousness, the firm had a network that was phenomenal. And so that was such a fun part of working there. But in Houston, I realized, you really don't need to go to Brazil to meet Petrobras. They're here in Houston. And there were multiple examples like that. And my only point of that is, I think I realized there was a different way to organize how we knew the energy world and how we connected with them and how we provided thoughts to them. And so all of this kind of came together over a few years of being in Houston. One of the more interesting moments, I used to just love to track down interesting people and try to understand what they were doing. And one of the guys who was a really interesting person in that era was Dan Pickering, because Dan Pickering had started this. I mean, remember, this is like ancient history for you, Trevor, but in 2003, 4, 5, I don't know how many people were using email, but I think we got email when I was at Goldman in like 96 or 97. So email, if you can imagine this, was still a relatively newish thing. And so Pickering just starts putting out an email every morning saying, this is what I'm thinking about. And this is what the companies are doing. And it's free. It's just like, and it's happening every day. And on Fridays, he's got humor in there. So I met Dan, had lunch with Dan, started getting his email, loved the email. And I would occasionally forward it to friends. And I'd say, do you get this email? Like to an energy CEO. And I would get one of two answers. I would either get, I do not get this. Can you please add me? Or I would get, yeah, I get it. It's great. It's the first thing I read. It's awesome. So, the other thing that was happening at this time, Trevor, it's hard to think back to all this stuff, but from 2003, 4, 5, 6, 7, shale is just changing like quarterly, different wells are drilled, different results, speculation starting about new basins. Like it's just, the shale thing is going from sort of experimental to, it's not mainstream yet, but it's just really taken off. And so that created a sizzle around the energy world at that time. That was very big. So I think the punchline of all of it is I really had loved growing up at Goldman. I was, kind of a cheerleader for the place. I had really wore my Goldman jersey with pride, but all of this stuff that we could do, have more technical people, be more flexible, change the way we interact, focus on more private companies, try to create a bigger, broader energy focused network, maybe move faster. Like there was just a lot of things that I was very curious about doing. I think just when the opportunity came along, what kind of cinched it is I knew and liked Dan so much and loved what he was doing with his team. That was such high quality research and so unique. And then Bobby Tudor and I had been friends forever since I got to Goldman. And Bobby he's about 6 years older than me. And it just felt like there was a moment there where the three of us were going to bring some unique pieces to that. Bobby and Dan went first, and I had to finish a couple things at Goldman, but I came about 6 months later. It just felt like the opportunity of a lifetime, to give it a whirl. I had a friend at Goldman. He was really interesting sort of career advice. And because as I say, it wasn't a place I was going to leave for just anything. And this friend said to me, he said, you rarely get a chance to put your hand on the wheel. So if you have a chance to put your hand on the wheel, meaning like the drive a place, you got to take that. And I just remember that I thought that was a really interesting moment. And, we never looked back. It was hard to leave, but it was exciting. It was a unique environment. I mean, we had some things that came together with the team that were very unique. But of course, we had the shale backdrop, and that made things really unique. It was actually September 6th of 2007 when I resigned, and then I had to take 3 months off and showed up at TPH in December of 2007.
This podcast episode is sponsored by Conate Water Solutions. Do you need cost-effective water sourcing options to supply your next drilling or completions program? Conate Water Solutions is a specialized hydrogeology company focused on water well drilling, testing, and water management services in Western Canada and Texas. Contact info@conatewater.com or check out conatewater.com for more details. This episode is brought to you by Galatea Technologies. Galatea is a software company based in Calgary that is focused on helping producers better manage their fluid logistics. Galatea enables field operators and truck drivers with the ability to make the optimal decision on every waste, water, or clean oil load, resulting in 20% savings on trucking and disposal costs. The Galatea platform makes it easy to create digital truck tickets, manifests, and shipping documents that automatically flow through the field data capture and finance systems. Galatea's platform is used by over 50% of Canadian producers, 600 trucking companies, and hundreds of disposal locations. Visit GalateaTech.com to learn more about how to optimize that last line on your lease op.
In hindsight, TPH worked out really well, but at the time, was it a kind of a risk that you were taking? Was it a big step? And how did you land your first clients?
We all try to do analysis, right? Anytime, should a company buy or sell? Should they buy company A or company B? Like, we all have these things where we're thinking about them and then analyzing them. But what I noticed was interesting about that one is, I did my best to think about it dispassionately. I remember thinking the tiebreaker, though, was I thought TPH would be more fun. I also thought, if I don't do this, I'm probably going to I had been at Goldman for 13 years. I thought, I'll probably be here for another 10, or I don't know how long, but I will, just generally speaking, probably spend the bulk of my career at one place. And it's not that there's anything wrong with that. In fact, that's a very admirable thing to do. But somehow the combination of knowing TPH would be more fun or a different kind of challenge, and also maybe just wanting to have that different experience. There was something about knowing if I didn't get off, then I probably wasn't getting off. It's hard to know exactly how that contributed to the thing, but it was absolutely the case that TPH ended up being, Goldman is such a big place, right? But we could have much more influence. I could get ideas from the drawing board kind of into the field. It presented a bigger challenge, but maybe a bigger opportunity. And also, I guess it provided a platform where we could experiment with stuff. We had a lot of things that worked out great. We had stuff we tried that didn't work, but that's a really fun, environment to work in. So it was a great experience. And not the least of it was related to just all the, getting to build the team person by person. I think when Bobby and I left in the fall of 21, we had tabulated everybody who had worked at TPH over its history. And it was something like 500 plus people who had come, left, or were still there. And that was a really satisfying experience to meet those people, know those people, watch those people go do great stuff or continue to do stuff with us. The people side of things, that's really, we were talking a little bit about banking, but any kind of service industry or advice, or when you're in a role where you're helping people, getting the people right and the culture right and all that stuff, boy, if you do, it's so much fun. It's so rewarding. I think TPH ended up being personally rewarding in a way that was, really special.
Did you have clients lined up when you launched the firm? And
No, not at all. It was funny. I think I remember, people were excited when, if you call your friends Trevor and say you're launching, something new, your friends are always supportive and, oh, that's great. I think a lot of them probably hung up the phone and said, well, not sure what he's doing there. He seemed to have a decent job. But, people had a lot of regard for Dan and Bobby. It was just, we used to joke, it was almost somewhat outlandish to think you could start a new investment bank that could have any real scale to it. Maybe you could do a deal or two every 3 years. But I remember my kids asking me when I left, they said, well, hey, I have a question for you. How many people does Goldman have? And I think the answer was 30,000. And they said, how many people does this new thing have? And I said, well, I think right now, maybe 25 or 30. And you could tell they were alarmed. How is it 25 to 30 going to compete with 25,000? And I just remember saying, well, it's kind of like basketball. It doesn't matter how many people you have on the bench. You can only put 5 people on the court at the time. So I think that answer made them feel better that daddy hadn't, lost his mind. But what I remember with the clients is a few things. One is they had this like, okay, well, this is interesting. I'm going to need to watch this and understand how this really works for me. Like, I want to be supportive, but, I need to see what it is you're really going to offer here. The second thing I remember about it is we had so much enthusiasm. We were so excited about what we were doing. We just found it. We just would go to these meetings and probably for the first 30 minutes, we couldn't stop talking about how excited we were and all the things we were going to do, so on and so forth. And so I think in some ways that was kind of contagious. It was kind of like, well, look at that. Well, this is fun. And then I think in some ways, honestly, some of those clients were like, well, this would be good if these guys, I think they felt supportive in that way. But I remember it was a meeting with Ward Paulzine, who a lot of your listeners will know. After one meeting, Ward said to me, he said, I know we're excited and I know you're really excited, but we really need to stop wasting all this time with these clients telling them how excited we are. And we need to do a better job listening to them. Anyway, it was kind of funny, but I remember a lot of excitement. I remember a lot of watch and see. I remember a lot of maybe the clients saying, this would be great if it worked, but it took a couple years of a lot of hard work to show them what we were doing and how we were building and why they could trust us. And we kind of had to earn our stripes again, but that was fun. And then, boy, once it started hitting, it really started hitting. I think that's an important lesson that we never forgot, which is no matter how exciting, it's like if you open a restaurant, no matter how good the food might be or how good the waiters might be or how good the location, it's just going to take a while for things to catch on. And you got to be patient and stick with it and keep trying. But that was really, fun building the business.
And the value prop was that you were a more hands-on team with more technical expertise and industry-specific knowledge?
Yeah, it's a very good question. So I think originally, I don't know that the value proposition, to be honest, was that much different than other firms. I mean, we had some nice and capable, experienced people, and we had technical people, and we had a really good research team that knew a lot, and we had a good network. But, it was a highly competitive space, and a lot of people are really good at a lot of things. And, I think in those first few years, we were doing it, winning the old-fashioned way, just like working harder, getting there sooner, being more impassioned. And it was a growing market, so it was a good time for us to be starting the business. But then as I think things developed, we were really specializing. We were highly specialized in buying and selling energy assets and companies. And we also became, particularly, with the help of the research side, we became very in tune with how investors think about all kinds of issues. And of course, with our technical team that Ward helped us build, we became very good at the technical side of the business. And then I think we wrapped it all in a package, which was, our reputation was everything. And so we were, reliable and candid and trustworthy. And so I think as the business started growing, what I noticed somewhere in there, because in the first year or two, we just felt, oh my God, we're so lucky to get some business. And then I thought, we're definitely getting better at this. And then, we did some unique things. We developed ties to Asia early on in the business. We started becoming the people who, if there was a new trend or a new activity or a new development, we were, kind of sort of getting there first. Like we started developing that kind of persona. We also became increasingly like the place where I think the clients felt we really cared about the industry. And so we started hosting a lot of events. We started doing a lot of things which were, helpful to the industry in some way or another. So I think our how we presented ourselves, what we knew, our network. Like it just really all started coming together. And I looked up somewhere in there. I couldn't tell you exactly when this would happen or when it happened, but I looked up in there and I thought, honestly, I think for what we are doing, we're really pretty good at it. So somewhere in there, we went from just pure excitement and, not a lot to talk about to, okay, we're starting to put a team on the field. Okay, we're in the game. And then, it's probably about 3 or 4 years in, I remember looking up saying, you know what, actually, we might be amongst the better teams in the league, so to speak. But I think it's really because of all that stuff. And I think the main thing that we did, Trevor, that, banking doesn't it's not an industry where you think of, people work together, they have fun, they cooperate, they share, they debate. It doesn't have that reputation. It has a different kind of reputation. And so we really worked hard on all these clients. All of us care about these clients. We work as a team. We do everything as a team. We just tried in every decision and in every hiring decision we made to create a place which was amplifying its capabilities because it worked together so well. And, that was a really, really fun part of building the business. Because, the other thing about it, this happened early on. I'm talking year off, but early on after I joined TPH, there was a young analyst, one of the senior in college type people, and she had an offer to join a major firm versus us. I gave her the recruiting speech. She ended up joining the major firm. I had been at TPH like a month, and I thought, golly, this is going to be hard. Like, honestly, I hung up thinking, I think she just made a very rational decision. So I just remember thinking like, okay, if we're going to get the best talent, particularly the young people, what is it we're going to say to them that gets them? The answer was, because I had really enjoyed working with the young people at Goldman. I'd been a staffer, recruiter, seen their lives up close and personal. I had, of course, been a junior person in banking. And, the junior life in banking also is something that gets a sometimes not positive reputation because you just work like crazy and sometimes your work was not necessary and, all those tales. But I just remember thinking if we're going to get the best people, I think we're going to have to be able to offer a place where people learn more and they make more and they have more fun. But if we could say that, if I could have said to that young lady who chose the Wall Street firm, if I could have said, that's great, you can go to that place. But if you come to TPH, I think you might learn more. I think you might make more. And I think you might have more fun. If I could say that, I thought, that'd be great. So over time, we really tried to make that the case, that, more of your projects were more interesting, more useful, better experience. We tried to pay people well. But then, we had a deliberate approach to like, we're going to have fun around the office. We're going to have a sense of humor. We're not going to be just sitting around, writing missed business reports and doing painful big bank things. We're going to have a holiday party and we're going to have some jokes around the office and, you're going to enjoy it. That became the formula. And, that was satisfying because frankly, that's the way everybody wants to work. Like you want to enjoy yourself and feel like you're doing good work. So that was the goal.
I'm not sure the order of how things went, but in the end, the firm ended up selling. Did you leave before? And what led to the decision to sell the firm?
So in late 2016, we combined with Perella Weinberg.
Mm-hmm.
We kept the two firms, really no change to how TPH was run or how to approach the business or anything about us. But the Perella Weinberg guys, we had known them. Both Bobby and I had worked at Goldman. We had known many of them from our Goldman experience. Combining with them looked like it might do a few things for us. One is the combined firm would have a lot of global scale, and that would allow, potentially the firm to go public but the combined firm, a number of options would open up. The other interesting thing about it was the structure offered us a chance to stay TPH, no change. We get to keep running it as we saw fit. And that was appealing because most of the time, if you do some sort of combination, you don't have that. You don't get that option. They had a restructuring business that was interesting. And in those days, there were the beginnings of maybe there's going to be restructuring activity in energy. So they had a lot of capabilities that we didn't have that we thought, well, there could be some opportunities there. They had a Mideast presence, which was interesting. We did not have that. And they also had a large asset management business, and we had started a small asset management business. And so it just looked like, for a handful of reasons, it might make for a good partnership. So I stayed, from the time we did that, I stayed for 5 years. And what I thought was, really interesting about that period, which included COVID and a lot of M&A activity and a lot of energy transition discussion and all kinds of change and all kinds of, things happening in the world. Probably what I feel so good about is that after 5 years in the new structure, it felt like TPH was just as creative, just as unique, just as special as it had been when it entered the marriage. And so that's a unique thing, as you know, because usually in combinations of those kind, the flavor of the smaller firm is lost. But I just didn't think that was the case. And I thought that was a achievement of everybody involved to keep the uniqueness that was and is TPH.
Fast forward to today, you started Veriten. Why did you start Veriten?
At TPH, we had started thinking kind of in the 2016, 2017 timeframe about, well, what comes next for us as an energy firm, right? Like what are the types of things we're going to be working on in the future? Who are the types of people and what specialties do we need? What will our research business, what kind of companies will it be covering? What kind of IPOs might we be working on? What will be the big strategic questions? How does the energy transition play in? How will technology change? The ESG movement at that time was still relatively the new kid in town. And so what are the implications of all this ESG stuff? And then I think we had a lot of questions about, is there a different way to do our business? Is there a different way to do research? Is there a different way to do banking? Could we use video more? We just had a lot of questions about a number of things. And so we had started those efforts, and it really was probably personified by, we started a podcast in the spring of 20. And the reason we started it is called Close Business Tuesday. The reason we started it is because if you remember that time, everybody was at home. The particular first day that we did it, oil had crashed because the Saudis and the Russians couldn't agree, and it looked like we were going to have a market share war or something bad was happening. So basically, everybody's at home, oil is crashing, and we need to find a way to connect with our clients and the world and tell them what we think is happening. So I just remember grabbing, then it was Matt Portillo and Mike Bradley, and just said, guys, let's turn on the video. Because we had developed a little TV studio or a little video studio. We'd kind of invested in this technology. And we shot this. I'll tell you a funny story. It was on a Monday. It was the Monday after the Saudis and the Russians their talks had collapsed. And after we did like about a 10-minute discussion, the video was so depressing. It was so awful. It was like, yeah, that may be an informative update, but who's going to want to watch this? This is just terrible. So we decided, let's come back tomorrow, Tuesday, and do it again. And, sure enough, Tuesday, there was at least a little bounce in the market. There was a little, some signs of hope. And so we shot this little video and we sent it out. It went out in the same channel that the email goes out. What was the Pickering Energy Research email, now TPH Research. So this gives birth to this little weekly energy discussion show. And then we kind of quickly realize we get a lot of great feedback on it. Oh, I appreciate that. And, one thing that's interesting about it, like my role on it was because research analysts and technical people and markets people and people with these specialized knowledge, they usually talk in a certain way. They have certain lingo. They have certain, I could play the role of the average citizen and say, okay, I'm sorry, back up. What did you just say? Tell me again what you just said. Okay, wait a minute. What, And so that was sort of an interesting way to share this information instead of, another report or another email or whatever it was. So we came back and did it the next Tuesday. And then we said, you know what, we could have a guest. And then it started going like this. And then we started getting more guests. And then it was becoming this weekly compendium, if I could use that weird word. It was becoming this, hey, what just happened in the world this week? What's happening on the screen? And what's today's meaty topic? And it started developing like that. And at one point, pretty quickly, it reached an hour. It was kind of funny at the time. Bobby was teasing me. He's like, I think you're onto something pretty good here, but I mean, you're losing everybody. It's going too long. And I just remember thinking, well, that's okay. Like, they don't have to listen. Mm-hmm. But, the problem with the world is it's too short, and things are too short, and these are complicated issues. So to heck with it. We're just going to go too long. So it started going long, and it's still about an hour. But that thing, this was all kind of, why did we start Veriten? By the end of my time at TPH, we had developed this podcast, this brand, this audience. Yeah. It had been going for a couple of years. All of it was based in one kind of fundamental question, which is, where is energy going over the next 10 years? And what you realized in there was there really wasn't a good source of unbiased, we are just trying to figure out the answer, sort of dialogue and analysis. There's lots of people who say, my thing's better, my thing's cheaper, my thing's cleaner, my party's better, my policy's better, my politics are better, my whatever it is. There's lots of people who have their gadget or their answer or whatever it is. And I think it's getting better now, but particularly then, that just felt like there's just nobody neutral standing there like, I'm not trying to sell you a report. I'm not trying to sell some other service. I'm not trying to sell you a product. I'm just trying to understand what is the answer. Like, just help me understand. And, luckily we've been around energy a lot. We're commercial people. And we do our homework. So we know the questions to ask, I think, a lot of times. And the other thing I think that we've noticed is that there's so many variables in the energy world that you really need a format or a place where you can say, like, what do people in India think about this? What do European financial people think about this? What do national security experts think about this? What do regulatory lawyers think about this? What do board members think, et cetera? What do industrial players think? Like, there's so many perspectives you need to get to try to sort out, the themes and the direction. It just so happened that the podcast was a great way to do that. And, the funny thing is, it's, as you and I are finding out here, I'm getting to know you. It's a great way to get to know people. It's a great way to network. And then, of course, we share our answers and discussions with everybody for free every week. And that helps us just get to know more people and helps us network. I think the other thing we found in this, which is really interesting, is it's important to just let them talk. What is your message? I don't need to get in the way. I don't need to interpret on behalf of the audience. I'm just curious. I'm just asking the questions, and then let the person talk. And by doing that, we've learned so much, because people share what they really think if you give them a platform. So we've had a ton of fun with that. And I thought it was extremely useful. And at the end of my time with TPH, I thought, I think you could build a whole new business around this, not just a podcast, but you could build a business around the spirit of, we're just trying to understand to the best of our ability where energy is going over the next 10 years. And if we really apply ourselves to that question, that will have real value if we can figure out some of those key answers. And so we started building from there with Veriten, which we got to by saying, well, what Veritas and energy, let's try to find truth in energy. Mm-hmm. Because these are big technical, financial, with lots of other issues, but these are big, complicated things. So let's just try to get to what we think is the truth. So we've done two things. We started a small investment fund. The fund is really, it's there in case we see something great, right, to invest in. But it's also there because if you're trying to understand where the world is going, boy, there's nothing that sharpens the mind more than potentially investing your own money in it. You just ask tougher questions. Like this has become my joke about the energy transition is one of the problems is most people are spending someone else's money. And if you're spending government money or spending the money of some huge multinational corporation, you just don't hold on to it like it's your money. So the fund has been really useful for understanding what we think draws capital and therefore what we think scales and therefore what we think is part of the next 10 years. And the other thing we've started doing is just working with companies of all types, helping them and their boards and management teams think about where their business is headed in the context of all these energy changes. So it's a really stimulating thing to do, Trevor. Once you widen out the scope and you go from nuclear through to nature-based solutions, I don't know what the widest spectrum possible, but think about the widest spectrum possible in energy. Once you say, I care about the whole space, there's so much happening, on any given day, something's happening somewhere. A very stimulating thing to do. I'm hoping it's a really helpful thing for our friends and really anyone who listens. Like, I think it has a almost societal purpose to it. So stimulating, it's got a purpose to it. And also I think after 27 years of banking, this was a really cool third big chapter to try to build, something that's a little different, but really very suited to the times we're living in. So I'm talking your ear off, but we've got about 20 people now. I'll tell you one last super funny story. You've had Arjun Murti on your show.
Yep.
I know you've had Dan Pickering on your show. So Arjun and I worked together when we were at Goldman like 23 years ago. He was in research. I was in banking. And we used to go for a sandwich and talk about life. And we used to joke, but we kind of meant it. It would be really cool to have an energy radio show and an energy fund. So, 23 years later, I don't know if this is an energy radio show with an energy fund, but it's pretty close.
Mm-hmm.
So, but just a funny, true story for you there.
That's interesting. Maybe a couple current events in energy?
Yeah, sure. I'm talking your ear off. So you probably wonder, what the heck did I ask this guy after I go on so long?
Well, if you have time, I have time. So
No, I'm okay.
I guess before we get to energy, what motivates you now? You, along with some of your other team members, Mr. Arjun Murti, don't have to work anymore. So you kind of touched on it just now, but what motivates you?
I do really enjoy energy. I always have. It touches so many issues. It's interesting when you say, I think this is a really fun thing about energy. If you say, well, I'm going to limit myself to things that are touched by or are touching or are somehow related to energy. Well, that's only like 90% of the world, so it's not a limiting thing. So it gives you freedom to explore anything. I think that I've always viewed work, it's like your team. It's like that's your base. So I think having a team, having a base, having something you belong to that other people belong to, that is your team is overused, but it's just, this is your group. This is your community. Like I probably just find that really appealing. I think an organization, like building an organization and having a place with cool, fun people and that thinks about doing new cool things. And then as you grow, you can think about doing even more cool things. And I think that is a kind of just a fun way to think about work. So in that sense, it's not work, right? It's like, it's your club. It is the place, the people you're associated with. It's kind of what you do with your day. And so I think that's why working is so much fun. And then energy itself right now, this moment we've been in energy for a while and where we're seemingly going to be for a while, where we are with energies, this is about as fascinating as it gets, right? Because you've got so many opinions, so many options, so many scenarios, so much recognition how important energy is. And that includes everything from, the developing world and the most basic energy needs all the way through to how do you power a satellite and how do you power AI and the spectrum of it together with all the other issues and opportunities. Like I can't imagine it's ever been more interesting than it is right now. So why Veriten is like, I think it's super stimulating. I think it has an element of some public service in it. Like there's just something here that can help broadly. I love having a team, growing with a team and a place everybody feels like they belong. And then energy right now, I just don't know how it could get any better than this. I know that's a funny expression because, sometimes it can be frustrating because we've done some dumb stuff in energy. We need the public and politicians and a lot of people to understand more about a lot of things, but it is a super stimulating time. And so I think the intersection of all those four things just make what better way to spend time. And I'll give you a last kind of fun one, which is when you start thinking about all the things, because a lot of people travel and, go on great vacations. If you start thinking about the energy world and the places you might go just with energy curiosity, like this is fascinating, right? Like you could, of course, go to Dubai in the Mideast and, whatever. You could go to India, see the developing world. You could go to, I'm kind of working my way around. You could go to Australia and you could see the new shale play that's taken off in Australia. You could go to Eastern Europe and you could talk to them about energy security and the environment and so on and so forth. You could go to Finland and see the new nuclear plant they just put into operation. You could do the same thing in Georgia. You could visit a copper mine or a lithium mine in Chile. You could go to the Vaca Muerta in Argentina. You could go to Colombia and try to understand what are they doing. They're short gas, but they need more. I mean, you could just go to so many places. You could visit big European industrial players and understand what kind of energy problems they're having. You could visit a coal mine. There's just so much stuff you could do. I guess that's my last way of saying, even though we're working hard here, Trevor, there's some ways to maybe go on some good trips and see some cool energy stuff too.
Maybe a couple thoughts on energy events and whatnot, if that's okay.
Yeah.
From the perspective of an American, some people would say the production in the Permian is peaking and it's not sustainable. What are your thoughts on that?
The Permian's a pretty phenomenal place. And there's no question that we're, of course, going through inventory every day. Mm-hmm. But there's also no question that the world's determination to find more, do more, be more efficient, go back, recomplete, find another zone, find a new way to do it. Like that intensity, that's the essence of the whole shale revolution. That intensity, everybody who's bet against that, that's a hard thing to bet when that intensity is finally going to slow down and when we're finally going to. So the way I end up cheating on your question a little bit, which is to say, it has to slow down at some point. I don't think it's imminent. I do think if I am a major player, I think ahead about 10 years from now. One of the things we say in our 10-year outlook is that the lower 48 of the U.S., its ability to be the driver it's been for new supply has just got to be slowing down over the next decade. And its prospectivity has to be, diminished somewhat, particularly in oil. So if you're a player in the lower 48, you should be thinking about where else might you go and try to get ahead of it, so that it's not too late. Where else might you go to find, more things to do? And I think one of those places is Canada, but there'll be some other international places that'll be interesting. Again, this is not really what you asked, but when we do our analysis of the world over the next 10 years, we see a lot of demand growth for energy. And that could be coming from, my partner Arjun Murthy does a great job talking about the 7 billion people in the world who have less and need more and want more and will obviously choose fossil fuels. But there are also things like the power dynamics and everything that's happening with electricity and power growth demand. So we see a lot of energy demand. We don't see the ability of other flavors of energy to rapidly fill that demand. We see, obviously, there's been less investment in oil and gas in the last handful of years, and there's less capital in the world that wakes up in the morning and says, I want to invest in oil and gas. So you have this confluence, and you have this lower 48 phenomena we were just talking about. So Arjun at Sierra was asked, what do you think oil and gas demand is in 2034? He said 115 million barrels a day. I don't know what the number is. None of us do. But our macro picture is for the need for a lot more oil and gas in a period where lower 48 will have less opportunity. There's less capital chasing it. And the things that could otherwise supply the energy are not here yet in the scale and at the cost that we would need them to be. So you've got this pretty robust picture for oil and gas over the next decade. And so I think that's what makes us optimistic for oil and gas companies, when they think about their future. But it's just been a while since we thought like that. Those are some of the handful of things we're thinking.
Again, from the perspective of American who's very connected, how do you view Canada, the oil and gas assets up here? Do you view it as a great opportunity or a risky bet politically, or how do you think about the Canadian oil and gas sector?
Well, I think the basic answer is very positively, but it does come with this unpredictable or less predictable macro political regulatory environment. And I know that could change. And if it did, that would be dramatic and so useful to a U.S. potential investor or company. So I probably view it as both, like so much prospectivity, so much resource, so much left to be discovered, so much work left to be done, so much potential to export more, do more, much more impactful than Canada already is. But yet a government that is, at least at the federal level, just thinks so differently about Canada's role in the world and what Canada should be doing and how Canada should be investing and what type of regulatory environment it should have. It's the potential of the resource and the people and the knowledge and the entrepreneurial spirit that's in Canada. There's no question. It's off the charts. The question marks around the government and the regulatory side, to my impression, I'm no expert, but to my impression, those certainly create a negative overhang.
Historically, it's been a bad idea to bet against American ingenuity in terms of oil production and oil plays like the Permian. But in the case that American producers need to refill the hopper, do you see them looking up north eventually? And maybe
Absolutely. And we, if asked, we advise them to. Honestly, there are a lot of places where it's easy to do business and there's a lot of places where it's not. So nothing is uniform. And as you leave Canada and the US and you look at other countries, there's going to be other issues. So I think if you're solving for, I need more resource, I want to go to a place where it's pretty easy to apply my skills. I want to go to a place which already has a lot of talented people. Yes, I'm going to have some risk, A, because I haven't been there or don't understand it as well, but B, because there's just some risks in the system. I get all that. I just think Canada sticks out as a place. If you were leaving the U.S., I think it would be number one on the list for, I could probably make a good business there. And I think what will be interesting, Trevor, as a lot of companies, we've had a lot of consolidation. These E&P companies are getting bigger.
Yeah.
In general, we think energy companies are getting bigger. People are going to be in more flavors. They're going to do more things. And as they develop these bigger balance sheets and they start debating, well, what do I do next? They will come to the conclusion, I should probably do what I know best. And that's, drill oil and gas wells. So it is logical for U.S. companies to think about Canada, Australia, Latin America, consider launching exploration efforts again, consider offshore. It is most Alaska. Consider oil and gas in new places and in new environments. That's probably going to be top of the list as an oil and gas company thinks about expanding, right? Because that stuff, even though it's a different flavor and challenging, it's still what they know compared to going into other lines of businesses, different things, etc. Although I think the question we get a lot is, after thinking about what the world looks like in 10 years, the question we get a lot is, how do I maybe need to change my business model? If the world is going to change in the way in which I think it's going to change, maybe I shouldn't continue to be just this flavor or just these two flavors. Maybe I need to structurally change to address that opportunity. And how am I going to get my investors comfortable with that? I think in all this, Trevor, it's the public companies that have it harder than the private companies, because the public companies, of course, they have to answer to investors. Investors have a lot of opinions, but public companies also get a lot of inbound pressures about, you should be thinking this, you shouldn't be thinking that, you should do this, you ought to do this. They get all that pressure. Public companies are going to have a lot to manage through, a lot of interesting decisions they'll have to make here.
There's a lot of capital in the States. How much do you think of that has been sidelined because of worries up north politically? Or how much capital do you think is on the sidelines that could be invested in places like Canada coming from the States? Is it billions?
Well, I think probably the first issue, so to speak, is that, everybody who invests in oil and gas, I think right now, most of them are reporting, I'm finding it harder to raise money myself. Whether the money's going into the Permian or going into the Montney, the base question of just general attraction for investing in oil and gas is still off its where it has been. And then now you're talking about a second order question, which is like, how much capital might be there for Canada is not, it's much less risky than a lot of other places. So, but how much capital could return if I think things have to heal in the easiest places to invest in, and then they can heal in the slightly harder places to invest. But, capital is so interesting. It can go from I'm not interested to a boom rapidly, because capital is just always sniffing the world for where's a good return. And when it senses something is really strong, I mean, the other thing that all of oil and gas has to do, we've had a couple of years of really good returns, but we've got to show that those are consistent and those are going to stay. And so there's probably a little bit more seasoning that's going on to get more capital back in the game. So I think eventually, if you ask me 5 years from now, there could be a significant amount of capital, back in the oil and gas space. But I think we need a few things. We need oil and gas to be an established, good place to make money. Still working on that. And then we need the dialogue around the energy transition and energy and the understanding of what's happening here. We need that to improve. We need that to get more reasonable. But I think both of those things are very possible, in which case you could certainly see money looking up and saying, we should do that. What people forget is that for a decade or so, if you were invested in oil and gas, generally speaking, you didn't make money.
Yeah.
And that's a real blow. I mean, it takes people a while to come back from that.
Yeah.
And so, we're still healing.
To wrap things up on a lighter note, what advice would you give to a young person in energy or in business in general?
The best approach is to go with the people you like most. The people / the topics. By that, I mean, people used to sometimes ask me, should I go this direction, this direction, this direction? They'd have their menu out. So, what do you think? And then they'd have these kind of pros and cons. And then they would, kind of analytically thinking it through. And I kind of was always of the mind that go with what you like and who you like. Because if you do that, it's going to be more fun. You're going to enjoy it more. If you enjoy it more, you'll do it more. If you do it more, you'll be better at it. If you're better at it, you'll be more successful at it. And then ultimately you will end up with what you're really aiming for, which is, I really enjoy it and it's working and I'm successful. And so where you don't want to end up is, okay, I'm doing it, I don't like it, and it's not working. Make your downside case. I really like everybody. I'm really enjoying myself. It's not working. If that's your downside case, then I think you've planned your career well, because odds are, if that's the way you plan, odds are that it won't happen. You'll do well because you're having fun.
Awesome. Well, we can end the formal conversation there. Thank you very much.
Well, thanks, Trevor. I talked to you off, buddy.
Hello, listeners out there. Thanks for checking out the podcast. Hopefully the episode provided some insights. If you enjoyed the show, check out trose.ca where more episodes are yet to come. You can also subscribe to the podcast where your token of support is much appreciated. Until next time, happy coffee drinking.